All right, back to the drawing board. Now we're talking about married filing jointly and married filing separately and what can happen once I do this. Now we've discussed about what it means in terms of liability. We've discussed about in terms of its structure, right? So in terms of liability, if you're doing married jointly or separately, you understand now that you'll be on the hook for jointly or you're not on the hook if you're separately. And we've covered community property, how that's split up. Now what we're going to discuss is basically what does it mean in terms of filing, the actual filing, all right? So once we're filing as a jointly, can this be undone, all right? You and I, we just got married and it's, January, February, getting ready to file our taxes. We go ahead, we file our taxes, we do jointly. Can this be undone, Greg? No, it cannot be undone once we cross the due date of the return, which is April 15th. So we still have that window of opportunity until April 15th, until that point in time to actually still come around and change our minds and do separately, right? That's our only other option. We can't come around and say, hey, I want to do head of household. If no other situation applies, I can't do single anymore, I'm married. So my only option is married jointly, married separately. I cannot undo it once I reach April 15th. All right, that's a very important thing to understand. There's an exception to the rule under if there's a spouse, death of a spouse, and then the executor is going to request married filing separately. I'm not going to go into that. Okay, we'll talk about that separately, and just know that once you go past that April 15th due date, we cannot undo this married jointly. What about the other way? Married filing separately, can it be undone? Yes, it can actually be undone, and we can go back and do married jointly for 3 years, okay, as of the due date of the joint return, had it been a joint return. So I can wake up 2 years from April 15th and say, hey, I married separately twice. I want to go back and file with my spouse jointly. Yes, I can do that, all right? But I can only go back for 3 years. That's it. That's the key distinction here. Okay, once you're crossing the line with the married jointly and all else has been, standardized, there's nothing different about it. Like, hey, I'm just a married couple. There was no death, no qualified widower situation, no abandoned spouse situation. I'm basically stuck with this. I'm stuck with married jointly and all the liability that goes with it. All right. And so that's basically how married separately, married jointly issues arise. We talked about why it's disadvantageous to file as separately. Okay, common questions we typically get, this is a good one. Will I get audited if I'm doing married separately? No. No, what increases your chances of getting audited is how much income you're making. The more income you're making, the more the chances of you getting audited will be. And we know that income of over $1 million, gross income of over $1 million is already going to be looked at. All right. So if you're nowhere near that mark, I would sleep very well. If I file separately, will I be stuck with the method of filing? And the answer is no. You may change back to married jointly 1 year and then do separately another year, and you can go back and forth as many times as you like in whichever combination you like. But remember, you have rules about going back and amending a return. That's different, okay? But from 1 year to the next, I can do whatever I like. That's not going to change anything, and that's not going to increase my chances of getting audited, nothing. It's just I do as I like, but once I file jointly, I cannot go back and just do separately anymore. That's it. All right. Some uncommon situations when we're dealing with filing would be, where each spouse has elected a different type of tax year. That I've never seen that, never heard of it until I looked into it a little bit, and that's just if I was to file and I, account for everything on the calendar year, and my spouse still accounts for everything under, let's say, a British year, which is from April to April, then that would be an issue, okay, because they have to coincide. But again, uncommon situations, so not much to talk about. All right, time to talk about issues that come along with married jointly. Married jointly is supposed to help. It's supposed to be something there that's alleviating the tax, basically combining the income, averaging income, but you're telling me there's a penalty. Yes. I'm telling you that there is a penalty besides being on the hook for the other taxes debt. All right, there is this concept, or rather this term, called the marriage penalty. And I first heard of this when I was first in college, and I took my very first tax and accounting class, and the professor was walking around telling us about the marriage penalty, and I was like, what is this marriage penalty all about? And I didn't understand it until I actually saw it in practice, because there was just so much to learn. But in practicality, people would come to us and say, hey, I just got married, nothing's changed, and it's the weirdest thing because now we owe $10,000. And that marriage penalty that I'm referring to right there really kind of went away after 2018, after the tax reform, because they equalized the brackets. But before, what they didn't do is they didn't accommodate for people combining their income. So when you, on a single basis, would not owe money with your withholding the way it was, and your spouse would not owe money with the withholding the way it was, when we would combine our incomes as married couple, our brackets would jump from 22 to 24 almost all the time, right? Because of the way the brackets were set up. They were set up in a discriminatory way, so that way it would hit people into this marriage penalty. And it would bump them up into the next bracket, so all of a sudden they owe money when they're filing as a married couple when they never filed before. And we started to see that, and that became a common question. Why is it that I owe money now when I never owed money before? Well, because the tax law disfavors you being married, that's all. It's called the marriage penalty. Now, came around 2018, they decided to make it more, so stringent, I guess is the word, or more, they relaxed it a bit, and now it really applies to people that start crossing the 35% bracket. So they're really targeting higher taxable income earners. So before the 35% bracket is just doubling up on it. All right, so if I'm in the 22% bracket and you're in the 22% bracket, until we reach the 35% bracket individually, well, basically you shouldn't feel a difference, or shouldn't feel any difference in our tax refund had we really filed as single people. All right, in that respect. Unfortunately, there's other things that are not really fair when we start filing as a married couple. And that's really where that marriage penalty still kind of exists, And these are some great examples right here that I've bulleted out. And what is it really saying, right? So if I'm married individually, I could have done, let's say, a deduction for state income taxes if I were to itemize my deductions for $10,000. And the same goes for if I'm single. So there's absolutely no difference, even though technically it should be doubling up, right? So if I'm a single individual and I get to deduct up to $10,000 worth of state income and other local taxes, then, and that person can do it, if they're single, well, if we're married, why can't we get 20? Why does it stay at 10? That doesn't seem very fair, right? So in one way, they kind of try to equalize the marriage penalty with adjusting the brackets. But on the other end, they didn't really equalize that other aspect to it. So remember, there's more than one aspect to this whole married filing jointly status. Okay, there's the rates, then you have the deductions, and they're both working differently, right? Because the rates are just going to tax the taxable income, but what you're entitled to in terms of deductions is a whole other aspect to this thing as well, right? So, and this list goes on. So basically, your capital losses would also not double up. So if you've lost money on the market before from stock investments, then you'll know that the most you can deduct is $3,000 in capital losses, and then in one given year the difference gets carried over indefinitely. So if you've had that happen to you before, then you'll be like, yep, but I didn't realize that it doesn't double up. If you're married, it stays at $3,000. Same thing with your mortgage, stays the same. Student loan interest, also $2,500 per married or individual. And the adoption credit phase out is the same. So the same base number is used. All right. So that's not very great, right? So they tried to help, they tried to make it better, but some things still remain the same, and still that's why you still kind of feel a marriage penalty, because at the end of the day, you're still going to owe money once you're combining incomes to some degree. Is there relief? Yes, there's some relief. Additional Medicare taxes kicks in at a slightly higher amount of 250 versus 200. Like I mentioned, the tax brackets below 35% are going to just be double. So that's a big relief where it wasn't before 2018. Standard deduction is double the single standard deduction. Okay, yay. They did introduce a higher standard deduction in 2018 reform. And of course, why wouldn't it double for married couples? It's always doubled. I would think that that's really outrageous if they didn't do that. And then some minor relief in earned income credit. I won't go into it. So who is this applicable to? Couple that still itemize their deductions because they have more than new very high standard deduction for married jointly. Income earners beyond the 35% tax bracket will really, get penalized more than anybody that has more standard situation. So that's kind of what I've been saying all along. Why is so with all this well, married filing separately is really disfavored. Married filing jointly is disfavored. Is there any benefits to it? Well, yeah, there are some benefits. They spell out like your adoption credit is there for you, credit for elderly, child independent care credit, earned income credit, capital loss offset. So, you have all these things that some of you probably will never have heard of if you're not in the rental real estate world. 25,000 rental loss allowance under the passive loss rule. But these are all things you get as a single person anyway. And so I don't see it like they're throwing me some bone. I think that this should be given, and if anything, it actually falls short of what it should be, because the capital loss should be 6,000, right? Why shouldn't I get credit for the elderly if I'm taking care of credit of an elderly person? Why is that? Why do they penalize against it if I do married separately? I don't understand the rhyme or reason why they do things. I just, we're dealt with it. A lot of things in the tax law don't make sense to me. But that's just how it is. So they call them benefits. I just think that these are other items that other people that are single are perfectly entitled to, and now you're going to throw it in there if I'm married and call it a benefit, because I'm not doing married filing separately because you discourage married filing separately. Anyway, that's just my rant about how things are composed. Pitfalls for married separately, yeah. So as if it wasn't enough that they finagled the brackets to make them unfavorable and high, you literally have the highest brackets. Not only do they slash all of your deductions and important key adjustments to income in half, not only do they disallow credits, but watch out for these other wonderful pitfalls. And so we've kind of discussed about where they get slashed in half, and so your SALT deduction would go to 5,000 instead of 10. All right, so if you only had one spouse that had 10,000 worth of SALT, it would now be lost, right? Capital losses, same. If you only have one spouse with 3,000 in capital losses, now it'd be lost to 1,500. Rental losses that were deductible up to 25,000 are now lost to slashed in half to 12,500. And basically all the other marriage benefits you see up here are disallowed. So yeah, you don't want to do married filing separately. This is why we don't want to do married filing separately. We still run it by the software, the old software. We still print out the report. We still tag everything properly to make sure that whatever report it is printing out, it's not just garbage out from garbage in, obviously, right? But yeah, so that's how that works. All right, I think that's pretty much it. I'm grasping my head here, trying to see if there's anything else that I can give you of value when discussing married filing separately. In other words, don't do it, guys. It's really disadvantageous. So unless your spouse is a real tax cheat and really, belongs in jail kind of situation, I would steer so far away from married filing separately that unless there's a very specific situation, like I mentioned, we had this one situation in 2021 where because of and this was again a very low income taxpayer situation, where there was already so many credits in 2021. This person was getting, I think, close to $20,000 worth of tax credits for the children and advanced income, earned income credit, and then there was a credit for the economic recovery. There was like tons of that. There was, it was like this year, 2021, where they just doubled up and tripled up on all these credits and the economic stimulus. So if you were just positioned just in the right way, and you were just starting out in life, and your income was low enough, and you had a couple of kids, you really got showered with money. And I had nothing like it growing up with our kids when they were small. And I've seen these young ones get like, I think it was probably close to $20,000 worth of economic stimulus and tax credits galore, just from just being in the right year, I suppose. But yeah, so other than that, I don't, that return had to be married, filed separately to give them even more tax credit, because there was that blue moon that I was describing, that if they still did married filing separately, their situation was so low that it didn't matter whether they filed separately, because the brackets were the same and they didn't have all these other specific items. It didn't affect them in any other way, except that they were able to add this additional economic payment, right, from the government. So their situation changed nothing by splitting them up into a married filing separately couple, splitting up the kids just right. Everything else was down the middle or tagged by income. And boom, all of a sudden one was entitled to additional economic stimulus. And that was, like I said, a unicorn, once in a lifetime, 2021. Only for that situation did it actually make sense, because all these other things didn't apply, and they were just in the right place at the right time with their situation. And obviously, they had the right tax practitioners that knew about this. I'm not going to take credit for this. My partner Angela looked this up with her resources and looked this up last minute through her vast network of individuals that discuss these matters. So she swooped in like a knight in shining armor, and actually got these clients an extra couple of grand, I believe, in tax refund. But again, it's so rare, right? So very rare. Anyway, that's the married filing separately. Discouragement. It's gonna, again, in summary, it's bad for your tax rates. It's bad for your items of deduction or adjustment. You end up losing a lot. And all you're gaining really is to be able to say, hey, I filed separately. I don't want to be on the hook. When you can achieve that through doing a married jointly return and kind of doing, what we'll call a prenup agreement, where you do innocent spouse relief and shine a light on your other spouse and kind of stay away from it. So kind of getting the benefits of both worlds. I would discourage that as well. Either go married jointly or go bust, as we call it here in the office. Quickly talk about death of a spouse. Just basically know that once that happens, you can file as married jointly through the end of the year, as long as you didn't remarry. And if you did remarry, then the other spouse would do married filing separately, and you would file jointly with the new spouse. If that didn't happen, and you have kids for who you maintain a household for the next 2 years, you can do a qualified widower filing, and that will still basically afford you the rates and deductions of a married spouse, married jointly return. And again, that's really only left for that specific situation. So surviving spouse, and with the kids. And so the first year again would be qualified widower. And then, going into the next 2 years, if you got the kids, you get those same married filing jointly rates and deduction. So that's kind of like the government throwing you a bone in that kind of situation. And last but not least here, I just want to make sure that I didn't skip out on this. Are there situations where married filing so it makes more tax saving sense? And I know I said no, but I just want to read it out loud. The key is to assign each item deduction to each spouse correctly, and it's hopefully the income to the kids restricted. Yeah, so basically everything I said before still applies in this sentence. I just worded it in different categories and rather in different context, but it's saying the same things over again. So if you just rewatch the video, you'll get the same input from it. Again, just to reiterate, we hardly see any situations that married filing separately will actually save our clients money in tax dollars. It's not done for that. Married filing jointly does have the most favorable tax rates compared to married filing separately. We said that. Okay, so yeah, once you cross the 12% tax bracket, married filing separately is the highest tax bracket there is. Other than that, is a single tax rate, which basically is doubled up until 35% tax rate, which is the marginal jointly. That's how they helped alleviate the marriage penalty. We said that. So in a way, the marriage penalty is gone, except for those items where there's still like kind of like there is a marriage penalty, because in a sense, if you filed single, you would be entitled to these deductions double, right? So it kind of still does exist, but not really. Okay, yeah, we discussed that. This is one thing I almost missed, and this is the most important, about the race. So now this is something that you don't really hear about, but you should know about. If, let's say, you decide to do married filing separately, sometimes this happens as people are starting to break up towards the end of the year. One spouse will actually race to file first because they might have all the itemized deductions. And the spouse that files first will basically force the other spouse to mirror how they're deducting their deductions, okay? And let me explain what that means by deducting their deductions. As taxpayers, we're entitled to deduct either of the standard deduction, which is the standard amount that the government gives us based off of our filing status. And remember, single gets about 12,000 and change. Married jointly is double that, right? Married filing separately is half of that. And you have head of household, like an in-between crossroad type of thing where it's 18,000. It's higher than single. It's not as high as married jointly, and it's not as low as married filing separately. So it has its own category. So those are standard deductions that the government gives you, just standard issue based on your filing status. But sometimes people will have higher itemized deductions and they want to take those instead. You can't take both. You take the higher of if you so choose. And itemized deductions can be medical, casualty or theft, mortgage interest, that SALT that I was talking about, real estate taxes, income taxes, sales taxes, okay, charity. These are all itemized deductions. And if you have a lot of them, which some people do, some people are very charitably inclined, they give like $30,000, $40,000, $50,000 worth of charity a year because, 10% rule, and that's what they do. They give, like tons of money, because they're very religious, they're very charitably inclined. So those people have very high itemized deductions. So if they have very high itemized deductions, you want to itemize, right? So if I have like $50,000 worth of charity and medical and all this other itemized deductions, I want to race to file my married filing separately return before my other spouse, because my other spouse has none of that. My other spouse didn't give any charity. My other spouse doesn't have medical, whatever. They're just going to do standard deduction. As a married separately, it's going to be half of the married jointly, or $12,000, let's say $500. So if that spouse files first, I have to remember the rule. I have to now mirror that spouse. And now all of a sudden, all of my charity and everything deduction just went out the window, and I have to mirror my spouse and use only the standard deduction, which is $12,500 standard issue from the government. All of a sudden, I lost $40,000 worth of deductions, which can be as high as, if I'm in the top marginal bracket, 37%. So all of a sudden, I'm losing a ton of money because I didn't act fast and I didn't file my taxes fast enough, and my other spouse went and filed ahead of me. So that's a major pitfall when discussing married filing separately that I almost forgot to mention, is the race to who's to file first. So guys, keep that in mind. That's really important. That's definitely something that should be discussed before either of you go and file separately, no matter what your personal relationship is like. This can really hurt one spouse. There's no need for that. Things can be worked out, discussed, and amended between the two of you. All right. Anyway, so that's so much for this 25 minutes worth of married jointly, married separately. The huge debate, the huge discussion issues that we see a lot of, and the questions that a lot of people want to know about and get educated about and learn about the intricacies of married jointly versus married separately. Here you go. This is almost 20 years of experience in the making, and I give it all to you in this great content with lots of value, and I hope that you picked up a lot from me in this respect. And I will do one more video on head of household, which is very quick and easy. It's much more straightforward than jointly versus separately. As you can tell, there's a lot more going on in those two than one might think. And there's way more than that. We just barely skimmed over it. And that's why, folks, again, this is why you need a tax professional. Once things are no longer, hey, I'm just single and I have a W-2, and things start getting complicated, you definitely need at least hire, just for a basic consult, a tax professional before you go ahead and start filing. So the smart cookies out there, they do that. They reach out, hey, I'm getting married in a couple of months. I have some major life changes. I want to talk to you. I want to see what I should be aware of, what's coming up my way that I should know about before I go ahead and just go and kind of file. And let me hear it from you, somebody that's been doing this for so long, and let me get your advice and just know what to watch out for. And that's basically what people hire us for. It's that foresight to be able to look into the situation and say, I've seen the situation before. This is what you need to watch out for. All right, guys, hope this helps. Stay tuned for more on Head of Household, and we'll talk again soon. Thanks. Have a great day.